With the Republican tax plan looking like it's going to be a sure thing, the Senate is now looking into their next priority. You wouldn't be surprised to find out that it is deregulating financial institutions or deregulate the banks, because one financial crisis just wasn't enough. Now they're looking into basically recreating the conditions that caused the first one. And this time, the Republicans, who are the main drivers of this, have help from corporate Democrats. I'm going to get to those guys in a minute. Now, this bill is called, ironically, the Economic Growth, Regulatory Relief, and Consumer Protection Act. Now, I love these Orwellian names. Hey, we're going to protect consumers by deregulating the very banks that screw over consumers. Interesting. Now, according to The Intercept, this bill would deregulate several parts of the financial sector and unravel many different consumer protections. I'm going to go into the details here of what it actually does. First, it eliminates automatic enhanced standards. Now, these are things like capital requirements and so-called living wills that lay out how to unwind the firm in case of trouble. So in case there's another Lehman Brothers, they're not going to have this plan to be able to phase out the bank, or to unwind the bank, I should say, and make sure it doesn't lead to a domino effect, which is what we saw back in 2007, 2008. Now, of course, this would apply to banks with between $50 billion and $250 billion in assets. Now, these are not small banks. These are banks like American Express, SunTrust, BB&T, and there are foreign mega banks like Barclays and even Deutsche Bank, whose holdings in the United States will fall within that threshold. Now, these international lenders, of course, have been notorious repeat offenders, paying tens of billions of dollars in fraud penalties. Hell, Deutsche Bank itself has been known as the laundromat, because it's been laundering money. And all the bill removes enhanced supervision from a total of 25 banks that control an estimated $3.5 trillion in assets and received $48 billion in taxpayer-funded bailouts, according to an analysis by Public Citizen. Now, this bill also changes stress tests, which check if banks can manage hazardous scenarios, and it eliminates it, not just for the big banks, it eliminates it for all banks. Gone. That means giant banks that are too big to fail, like JP Morgan Chase, Wells Fargo, and Bank of America, along with every other big bank in the country, gets assistance in this so-called small bank relief bill. The stress test itself would change for these large regional firms, which would be, like I said, eliminated. Now, the bill also rolls back protections on mortgages, on the mortgage market, by tweaking so-called safe harbor and qualified mortgage provisions in ways that would allow small lenders to sell high-cost, adjustable rate mortgages and avoid accountability in court for wrongful foreclosures. So immediately, you're helping the big banks, and you're also helping small banks avoid any sort of accountability. The bill also eliminates the need for appraisals in certain rural areas, creating incentives to cheat home buyers, exempt sellers of manufactured homes like trailers from mortgage rules, and it restricts data collection about mortgage lending that could help regulators spot the next crisis. So what they're doing is just a huge elimination of all of these bank rules that were designed after, in the wake of Dodd-Frank, to, they're eliminating all of these protections that were designed to prevent another financial crisis, which would, like I said, Dodd-Frank was put into place to also prevent. So they're getting rid of all of these regulations. Now, it does say, interestingly enough, consumer protection in the bill. Is there anything in there that protects consumers? Kinda. There is apparently a very watered down provision in this bill that would actually offer consumers hit by data breaches at credit reporting agencies like Equifax, which recently had a data breach, that would offer people one free credit freeze and unfreeze every year. Wow. Boy, you're really helping those consumers. So look, this is Republican 101, right? Give massive giveaways to the banks and throw everybody else a tiny little bone and call it consumer protection. That would be laughable if it weren't so sad and pathetic. Now, speaking of sad, here come the corporate Democrats. Now, it's fairly obvious that all the Republicans are going to vote in favor of these changes. However, they're also going to have some help. For Democrats, Banking Committee members Joe Donnelly of Indiana, Heidi Heitkamp of North Dakota, John Tesser of Montana, and Mark Warner of Virginia negotiated this bill with Republican leaders and are expected to support it. In all, 10 Democrats have actually thrown their support and co-sponsored the bill. This isn't just saying, I would vote for it. No. These 10 Democrats co-sponsored the bill. They put their name on this and said, it made the proclamation that these banks are being treated unfairly. I'm going to deregulate these banks. I'm going to work with the Republicans. I'm going to work with people who just destroyed your health care, who just passed a giant tax scam that's going to give billions of dollars to the rich. I'm going to work with those guys to deregulate the banks. This could theoretically defeat a Senate filibuster. Again, it's almost no question that all the Republicans are going to vote in favor of this, and now they have enough Democrats to beat a filibuster. You know what that means? Hold on to your wallets.